want to get back to you guys on the panel. Jim, you think a slowdown in growth here in the U.S. economy is a real threat. How does the strong dollar play into that?
I think a lot, John. You know, this is the first time maybe in this bull market where kind of the number of people worried about recession has really kind of gone away, and people feel good. The Fed's finally easing, and reports look good. But I think, to your point, we've had a lot of tightening here since September, since the Fed has eased. Bond yields, of course, have gone up almost percent. Money growth is still only a little over 3%, which is too weak to support 5% nominal GDP growth. And generally, real GDP growth falls when that is the situation. And then lastly, to your point, the dollar has been amazingly strong, John. It's up close to levels of all-time record highs of 1984. And we know what that did. That created, a decade or more of disinflation and falling yields and weaker growth. We're essentially pricing the United States out of the world marketplace. I think this is going to come home to roost with weaker growth, and maybe that could set off a recession scare. I don't think we're going to get one, but I think it could be enough to rumble the stock market a little bit during the course of the year.
Interesting. Jose, what does it mean abroad, though? At HSBC, you seem to think the rise of India and the Southeast Asian economies is a major theme for the year. We're going to talk about that a bit more on the show. But India's markets haven't been performing so well to start the year. So how does that play out?
Yeah, I mean, look, it's always been a market that has not been cheap. There's no question about it. And you're paying for quality in India. It's a diversified, young economy with a good legal system, and it's become much more productive in recent years. So we like India. We like Japan and Asia. The growth rates just look still very solid, despite what we've seen, some trouble in China. And we think that can be straightened out in time. But also the ASEAN countries are providing some real upside. But at the end of the day, to Jim's point about the dollar and potential risk here, remember, one of the big opportunities we have is that we continue to see an inflow of capital into the U.S. markets. And we think that's a positive driver, a secular driver for a lot of the themes like the reindustrialization of the U.S. and the tech cycle that we think will help keep the economy out of recession, just like he does. So, yeah.
Okay. So, Jim, despite concerns about growth, you say don't raise cash, but do some reallocation instead. How should people do that?
Well, I don't expect a bear market nor a recession, to Jose's point, this year, John. I think we're going to have another positive year. But year 3 of bull markets, which we're in, typically don't do as well and have more corrections. And I think that's what we're headed for. The problem is trying to predict corrections is pretty perilous. And so I wouldn't bet a lot of cash. What I would do is sell a little bit of your winners, maybe not all of it, but some of that, and move to some of these defensive stocks, defensive sectors, or high dividend yields, or high quality. Some of those areas have really been beat up on a relative basis. And if we do get a sniff of a recession scare, they're going to do pretty well. And then you can sell them and go back to the more aggressive plays, again, sometimes later in the year.